In the financial world, there is such a legendary figure whose life is full of drama, like a thrilling Hollywood blockbuster. Born into an ordinary middle-class family, he harbored a dream of wealth that could change his destiny. From obscurity to shocking Wall Street, he built his own financial empire in just a few years. However, when he stood at the peak of wealth, enjoying the envious glances of others, a sudden storm swept him into endless controversy and crisis. He is Steve Cohen. Cohen grew up in Great Neck, Long Island, where his family's economic status was only average. While his neighbors were well off, his family was relatively poor. This contrast made the young Cohen develop a strong desire for wealth at an early age. Fortunately, his grandparents were wealthy and often took him to high-end places, allowing him to witness the luxurious life that money could bring. This further deepened his yearning for wealth. During his high school years, Cohen demonstrated an exceptional talent playing poker. He was obsessed with the game not merely for entertainment but keenly grasped the mysteries of probability and uncertainty within the card games. He often played poker all night long, earning thousands of dollars in a single night with his precise judgment and bold decisions. This not only honed his thinking skills but also accumulated his first pot of gold in life, and at the same time, he realized that making money was not limited to the traditional 9-to-5 job. With outstanding academic performance, Cohen was successfully admitted to the Wharton School. During his college years, he encountered another significant turning point in his life, working at Gruntle & Company, a brokerage firm near Wall Street. Here, he met Rono Iser, an expert in options arbitrage. As a novice, Cohen was full of confidence in his trading skills. In one transaction, he astonishingly made a profit of $4,000 in one day and another $4,000 overnight. This achievement greatly impressed his colleagues, and he was thus given the title of intuitive trader. In the mid-1980s, a merger and acquisition boom swept through the U.S. stock market, and Cohen seized this opportunity with great acumen. He carefully positioned his investments around acquisitions and IPOs, earning a cool $10 million each year. By this time, he had already made a name for himself in the financial world. In 1987, the stock market suffered a Black Monday. The company where Cohen worked was on the verge of bankruptcy and his team suffered heavy losses, with nearly half of their capital gone. However, this setback did not defeat Cohen. Instead, it strengthened his determination to start his own company. In 1993, relying on years of accumulated experience and connections, he founded SAC Capital. In the early days of his venture, he invested his own $10 million along with funds from other investors, and SAC set sail. Cohen applied the strategies from poker games to investment. He was well aware of the balance between risk and return and never let emotions influence his trading decisions. When he found problems with his investments, he could cut his losses decisively. This outstanding risk control ability enabled SA to achieve astonishing results in a short period of time. Within just 3 years, the scale of SA quadrupled, and Cohen accumulated a huge fortune, began to purchase luxury mansions and expensive artworks, and led a life of a top tycoon. However, with the rapid development of the hedge fund industry, competition has become increasingly fierce. In order to gain an edge in the market, some people have resorted to taking risks, and insider trading has begun to breed within the industry. In 2008, Matthew Martoma, an investment portfolio manager at Cohen's firm, was embroiled in an insider trading scandal. Martoma obtained insider information about 2 pharmaceutical companies through special channels and established large positions based on this information. Although Cohen made a profit of $276 million from this, he was also drawn into this controversy. In 2014, Martoma was found guilty, and Cohen was also charged by the SEC for failing to effectively supervise his employees. In 2016, Cohen reached a settlement with the regulatory authorities. He was barred from managing external funds until 2018. Although he managed to avoid criminal prosecution, this incident dealt a severe blow to his reputation and career, and the financial empire he had built was on the verge of collapse. After suffering this major setback, Cohen did not choose to give up. He transformed SAC into the family office .72 and began to invest with his own funds, and turned his attention to other hedge funds. The Melvin capital he invested in achieved a 47% return rate in 2020, which gave him new hope. But fate seemed not to be done with Cohen just yet. In 2021, a storm sparked by amateur traders on Reddit swept through the financial markets. GameStop stock was heavily shorted, triggering a short squeeze and causing its price to soar. Melvin Capital suffered heavy losses in this turmoil. Cohen invested $2.75 billion in an attempt to rescue it, but still couldn't reverse the situation. This event dealt another heavy blow to Point72, erasing its former advantages. Facing a series of setbacks, Cohen did not lose heart. He began to actively expand his investment areas, venturing into venture capital and other fields, in an attempt to find new profit points. Despite the constant pressure from regulators and negative public perception, he continued to quietly explore in the financial sector, hoping to rise again. Steve Cohen's story continues. He rose from an ordinary family to the peak of wealth, then fell into a trough due to insider trading, and has since been constantly seeking new paths. His experience is full of challenges and opportunities, and also shows us the cruelty and charm of the financial market. In this uncertain world, what surprises or challenges will his next turn bring? Let's wait and see.